Disclaimer, I'm not a financial advisor and I'm not providing buy or sell recommendations. I'm just giving you my opinions. Please do your own research before investing.
Hello, crypto cowboys. Welcome back to my channel. My name is Emeka, and today I'm going to talk to you about stop loss orders. Now, in the recent downward trend in the cryptocurrency market, stop loss orders have become increasingly important. Actually, they've always been important, but if you haven't used them before, you better start using them now. They could be the difference between losing your shirt and losing your house. Now, the market has been very shaky these days. There's lots of regulation coming in, and this has put incredible downward pressure on the prices. People are just taking their profits and getting out. Now, I'm still bullish the cryptocurrency market. I believe it's going to be around long term. But in the intermediary, there are possibilities to lose your money, and you want to protect yourself against that. Just imagine if you're one of the people who held the Bitconnect coin prior to January 14th this year. You're sitting pretty in a nice coin in the top 20. Maybe you're off somewhere in Hawaii or Barbados with your significant other for some love time. And then all of a sudden when you get back, you look at your portfolio and you see this. You've lost all your money because Bitconnect dropped from $400 down to $10 in a week. And depending on how much money you invested in Bitconnect, you would have lost everything you had just like that. Now, you could have prevented this if you had a stop loss order. And what that means is you have an order in the exchange that tells them to sell your cryptocurrency if it hits a certain price.
Okay, so let's look at some numbers to show how a stop loss can really help you protect your downside. So let's say I own some Litecoin, which I bought on, let's say, Coinbase. Litecoin. So I bought some Litecoin on Coinbase. Let's say I own about $5,000 worth, assuming a 1% fee. And let me say I bought it at a price of $200. The current price right now is at $172. So as it stands right now, I am risking $5,000. And what I mean by this is, if the price of Litecoin drops from $172 down to $0, I have lost $5,000. And as I mentioned with the Bitconnect example, it's a real possibility. Now, if I put in a stop loss, let's say I put in a stop loss at $150. So that means if the price falls to $150, the exchange will automatically sell my Litecoin. Then I'm only risking $1,287. Because that's as low as my loss can be. I can't lose more than that because the moment it hits 150, I'll be taken out of the trade. So let me do another example. Let's say I bought $5,000 worth of Bitcoin and I bought it at a price of, I don't know, $9,000. So my risk right now is $5,000. But if I put a stop loss on Bitcoin at, let's say, a price of $10,000, then I'm not risking anything. I actually have a positive $500. And why is that? Because my stop is above the price that I bought it at. So that's a concept in trading what we call ratcheting your stop. So let's say you buy a cryptocurrency at $9,000. At that point, you could put a stop loss at $8,000 so that if the price falls against you, you won't lose too much. But now if the price goes up, you can actually move your stop from $8,000 to like $10,000. And at that point, you're only protecting your profits because you're not going to lose anything at that point. And if I now jump over to my summary tab, I can see all my exposures on all the different currencies. My maximum loss in Bitcoin, there is no maximum loss in Bitcoin right now because I have a stop loss in there. And worst case scenario, I'll only make $500 in Bitcoin. And in terms of Litecoin, worst case scenario, I'll only lose $1,200 in Litecoin. So that's why there's value in entering stop losses.
If you want to buy long-term fallouts, you've probably already downloaded this spreadsheet. If you haven't, there's a link to it below. Now, let's actually enter the stop loss order in GDAX. So I'm going to hop over to gdax.com, which is the exchange for Coinbase. I've mentioned GDAX in a couple of other videos, but if you own Bitcoin or any of the other cryptocurrencies on Coinbase and you want to send it to another exchange like Binance or Bittrex, don't send it through Coinbase. Transfer your funds to GDAX, then send it through GDAX because you'll pay no fees. You're wasting fees when you're sending it through Coinbase and you don't have to. Also, try and buy or sell your cryptocurrencies through GDAX instead of Coinbase because you're also saving on fees. It adds up. Anyway, I'm going to show you how to enter a stop loss order on GDAX because that's how you enter a stop loss order. You have to use an exchange like GDAX. I don't think you can do it through Coinbase. I'm not sure. I've never done it through Coinbase, so don't quote me on that. But I usually do it through GDAX. GDAX is Coinbase. So if you have a Coinbase account, you have a GDAX account. Now come over to GDAX and go down to, let's say I want to put in a stop loss order for Litecoin. It's very simple. All you do is click on stop, click on sell, because I want to sell my Litecoin if a certain price gets reached. And let's say I want to sell 0.1 Litecoin. And I put in a price of, let's say, 170. And then I place this sell order. So you get this warning that says this order may fill at a price less favorable than the stop price. Now it's important for you to know that even though I'm saying sell my order at 170, there is a possibility that if the market is moving very quickly, my order might be filled at 160 or 150 because on a fast moving market, that might happen. The price of 170 might actually never be reached. So it's important to know that, but it's still better to have a stop loss to protect you from incredible losses. That's why it's good to have. So I'm going to say okay and place this order. Success. So now I've placed a stop loss order in GDAX. And it says it right here. At a price of 170, I have an open order to sell 0.1 Litecoin. So now you know how to put in a stop loss order in your GDAX account. You can also do the same thing in other exchanges like Bittrex, Poloniex, and Binance. Now it should be noted in those ones, when you put in a stop loss order, you're not going to be selling to a fiat currency. In other words, you're not going to be selling your cryptocurrency for dollar. You're going to be selling your cryptocurrency for another cryptocurrency. If I were to put a stop loss order in any of the other exchanges, I would use Bitcoin or Ether. And that's it. Now you know how to put in stop loss orders to protect your backside in case of downward moving markets. Thanks for watching. Happy investing.